This is Sinta here. I would like to talk about today's topic I'll be touching on is actually buying insurance. This is what I read about. So there are a lot of things you need to know about insurance. Basically, it insures maybe your savings, your hospitalization, stuff, medical costs. But it, but actually, the truth is that the insurance companies are going to rip you off. So from what I heard is that financial consultants don't get paid a basic salary, and they'll get a certain amount of commission based on how many policies are sold. So to give you an idea of this thing about the insurance industry, it's a total rip-off. They want your money. I mean, if let's say if you invest in a savings plan for some 20, 30 years, for which that there's a guaranteed return or some percentage per annum in interest. Because from what I actually read from the street stuff is that these financial consultants, they actually want to rip you off, say this insurance, say this plan is great for some reason, then you need to actually pay installments for for your insurance payment every month till you get old, maybe you get back a certain amount. But the thing is this actually from what I read from the report is that most insurance policy holders, they are not happy with what they are getting for their premiums paid. That means it's going to be they invested in such a substantial amount of money into their policies, and they get back very little. Which means to say, because of inflation and other factors, like for example, the writer actually said something about she has 2 daughters, and then she has thought it'd be a good idea to actually buy an education plan for each of her 2 daughters. But turned out that he wasn't really happy with what he actually got from the insurance company. So meaning to say is that the reward that if you put in an amount of money to actually invest in an insurance plan, it doesn't mean you put in high risk, you get a high reward. To actually state the truth is high risk but lower rewards. That's why the thing is this is that you can actually see from those job ads that financial consultants actually they can actually earn like a maximum like $4,000 or $5,000 from the job ads. It's based on how many policies or so they'll rip you off. They're enthusiastic. They say this fucking insurance policy is great, but it turned out that most insurance policy holders, they're not very happy with what they actually got in the end. Instead, the money actually goes down the drain. So if you consider investments, read the prospectus carefully. Sometimes due to changing market trends, the money they can actually vary. But you have to actually read the business news every day, the Straits Times or maybe the Sunday Times to find out what's going on in the market today. And from what I know is that if you want to actually get a loan, business loan or maybe education or something, because actually banks have already tightened their lending policies, since the 2008 and 2009 financial crisis that happened years ago. They have already raised the bar, for some lending criteria for loans, and to top it off, actually, banks and insurance policy, banks actually, the thing is this, is that banks actually charge very high interest rate for their loans. Actually, it's a win-win situation. Is that you get to you get the loan, you get to finance, business or maybe an education, but they are actually meant to rip you off. The truth is, you pay back the amount. There's a very high, percentage of interest rate per annum. It's a win-win situation. They earn money, you get the money, but in the end you lose a lot more. And the thing is this, is that, in the report that I've actually read is this, the peer-to-peer, money lending services on the net, actually the guidelines were not, made official by Monetary Authority of Singapore. Is that this report actually did mention that SMEs, small and medium enterprises, they're actually, getting loans for expansions of the business. So, meaning it's quite hard, it's harder to actually pay back. Let's say you have maybe a business that requires you to run, and then you have to pay back the loan amount, let's say within 12 months or 24 months, maybe. Actually, the thing is this, is that P2P is that they will charge higher interest rates than what banks offer for their loans. Which means to say it's high risk, but it's not high reward. You will end up losing more. So to create awareness about this, I will urge all business owners and those going for a degree to actually think about carefully. If there's insufficient cash flow, or maybe insufficient amount of money that's coming in, probably from the salary or maybe other sources of revenue, you're screwed. So I hope to actually create awareness of this video. I hope to create awareness of this video regarding loans and insurance policies. Now, for insurance policies, it's a lifelong commitment. Once you sign on the dotted line, you have to pay insurance premiums every month. If not, the insurance policy that's signed on the dotted line will be null and void. That means you either lose money or break even. So that's all the advice I can give about these things about finance and about insurance policies. And thanks for watching. I'll see you guys in the next video.